Wondering what you can do to avoid going out of business? Well, watch on. As a business accountant, my team and I spend all day long helping business owners on their journey. And as you can imagine, in our work over the years with startup and growth businesses, we have seen a relative share of failures, not as many as you might have thought, but there are still quite a few, and they tend to be common themes. Now, this is kind of part 2 of a little mini series I did. I did another video talking about the 3 key reasons and themes, I suppose, of why we see small businesses failing. And in this one, I just wanted to expand a bit more on, okay, well, knowing that, what should you do? So if you haven't seen that video, go and do it. It's only about 6 odd minutes, just to give you an idea, and I'll go in there a few more details of why things might have happened. And in this one, I want to give you some food for thought around what you can do about it. So if you enjoy these type of videos, make sure to click the subscribe button and the bell below so you get notified whenever we release more videos just like this one. So we talked about the number 1 theme or reason why a small business might fail being the fact that it basically lacks the ability to sell its product in quantities or service in quantities high enough and in prices at the right point, and the business model might be wrong, etc., etc. So what can you do about that? Well, I think when you first start the business in those early phases, you need to do some sort of financial planning and just have a look at, okay, if I sell a product for this is what it costs to make that product. That's what's actually left before I've got to pay for my kind of overheads, so my accountancy, my telephone, all these other things, my rent, my insurance. So how many have I actually got to sell? And knowing that kind of model, and that you feel that's achievable, or if it's not achievable in the early stages, how much cash are we going to need in the long term? And that'll link into the other 2 points we're going to talk about in a minute. Understanding that, a little bit of a plan. I'm not necessarily talking 12-page business plans, but just literally that model. It can be done on almost I would say like a fag packet. It's probably a bit out of date now, but on a small piece of paper, just literally how many are you going to sell, what you're making per unit, or if you're selling a service, I don't know how many hours you do, how many projects does it look like you need to do in a month for X price to make that work backwards, and have a look at that and just play around with it. Nearly every electronic device you're going to pick up's got a spreadsheet, but if you haven't got one of those, a calculator and a bit of paper will do, and just do a little bit of planning. And I think the other thing we see is that if you're talking about pricing particularly, it's worth going out there. Just Google value pricing, particularly if you sell a service. It's more difficult with a product, not impossible. We see it with hospitality all the time where this works quite well, but just have a stick in there and talk about value pricing and just have a look at what that means. And that's talking about how you build up value in a pricing. It might be using menus, there's lots of other things you can do, but it's a strategy to help you achieve higher prices. So that's quite a good one. But as a kind of just a base piece of advice, I think whatever you think the price should be, maybe just put it up a little bit higher than you think is okay and just test it and see what happens. Don't get too hung up on what other people are charging, because they're not you. You don't know what the intricate value of what you're going to do versus what they're going to do is, or it's sometimes different with a product, but again, if you can try and really understand what value extra your product brings at that price point, can really help. So just doing that little bit of research, not big one on research, but doing that little bit of research, but definitely that bit of numbers planning around, does this actually work and how much am I going to need to sell at the beginning to keep this going, should help avoid just not selling enough to begin with. Obviously, if you get out there and you no one wants to buy your product or service, then there's a bit more of a question mark. But I think if that's the case, it feels like no one wants to buy it, you can tweak prices and stuff. But before going around tweaking the price down, can you build these other things around it? Can you build more value around your pricing? Can you build brand? Takes a bit longer. And more importantly, one of the biggest things we see here is we just see a lack of sales activity. Because one of the things I don't teach you in school is any sort of sales training. I mean, actually behind me, there's some books here that we often recommend to people who are interested in that. But if you just go out and Google, one of the things you may want to invest in early is some sort of sales training to understand the basics. It doesn't need to be the kind of this dirty word that it feels like a lot of the time, but it is absolutely a key skill, being able to sell yourself and your service and your product for your business early on. So, and we tend to see a theme of lack of sales activity. So let's say you're a consultant and you're on a project, all seems great. We see a lot of consultants where suddenly there's no more projects coming and they're like, oh, where's the next one coming from? And it's because they weren't doing any activity to kind of continually develop the next product and everything else while they were busy doing this other thing. And of course, when you're a real micro business, that's a really hard thing to manage, but it's absolutely key in making sure you don't fail because you just suddenly don't have any projects coming in, anything to invoice, no money coming in to live on or pay anybody's bills, and then your business ends and you end up back in a paid role. So it really does apply. So plan and make sure that you're doing some sort of sales activity all the time. Never stop kind of promoting, building that brand and reaching out to people. And as I say, this is not just my opinion, this is just the themes we see. It's just what we've encountered, and it's one of the great things about our job. We really get to learn from that experience and help business owners kind of just get a feel for the kind of these obvious mistakes, or what feels like obvious from us because we've seen them happen so often. So yeah, that's the angle we're coming from. So then on the second one, we were talking about the fact that you've had a little bit more success, and then actually you've started to take a certain amount of money. And we see this one happen a lot, where the owner continues to take too much money. It normally tends to happen when they've had a bit of success and they get used to the cash flow, used to a certain lifestyle, or they think, do you know what, I'm going to go and buy that bigger house, or I'm going to do that extension, I'm going to take a large chunk of money out with no thought at all to future tax bill, future needs for the company, anything like that, and it just drains them of cash. And they end up quite often, particularly if they're like quite a micro business, they end up in this circular thing where they are always owing tax. It feels like they're always owing tax, but it dates back to a tax bill that, you know, on that original chunk you took back when, and you just didn't plan for it appropriately. And of course, there's tons of videos on the channel talking about how to plan for your tax bill, and particularly your dividend tax. It's not a technical term, but the dividend tax, as people refer to it. And those things in combination, making sure that you plan appropriately and put enough money aside, is really going to make a big difference to not getting in this area. But actually, from a sort of step back position, it's more a case of, do you actually know that that money's right? Can you read a profit and loss? Can you read a balance sheet? We'll talk about a balance sheet in a minute. This one's quite profit and loss related, I think, initially. And we've done other videos talking about some basics of how you would do that and where you can glean that information. But you know, if you can't read your profit and loss and work out, have I got enough profits to begin with to take the money? So if the bottom of your profit and loss statement that shows kind of your income and your expenditures shows last month you only made $4,000 and you're taking 10, then and that can happen. And again, remember, just if you haven't come across this concept, bear with me and just trust me on this, that it's very possible to have cash and not have enough profits, or vice versa. You can have quite high profits on paper and not enough cash to pay everything. They do exist because of the kind of the way money moves through a business. So and that's the case, you can quite often take money to live without actually making it any money on paper, and then what happens further down the line is suddenly there isn't any money, and it's kind of this leading indicator there's a problem, but people don't look at it. So understanding, getting a real handle very frequently on what profits you're making, and understanding whether that money you're taking accounts for future tax is going to be a big one to avoiding this mistake. And look, this one's a bit of a tough one, a tough conversation to have, but if you've taken on employees and you're still taking the same money, I think sometimes you do have to have a look at yourself and think, am I putting in enough effort and activity to warrant what I'm paying myself? So a very common one we see, owner will start to do well, they've put in loads of hours, done loads of work, and they think, great, I've employed someone to do that now, I can have a bit more of a sit, you know, a little bit of a sit back, and actually on paper it still doesn't work. And they should actually, for some of that money, they should still be generating some work at the place. So I don't know, let's say you're running a cafe and then you've employed some people, you think, do you know what, I'm gonna start having several days a week off, but actually your kind of wages, part of that money you're taking is needed still to produce the service, and it's a problem. So all you've done is kind of replace yourself, but it's not generating enough profits to pay you and them. It's that kind of feel. So I think sometimes an honest conversation with yourself about your input is really needed at this moment if this becomes an issue. And also just to get yourself into a challenge, isn't it? You know, if that is your thing, you want to take that little bit of a step back, then build that model, build those financial goals, and really understand what you need to hit to be able to do that. What are the needs of my team for me to be able to do that? What's the financial figures need to look like for that to be the case? And you can definitely do it. But in the short term, might need a little bit more input again. So the third reasons are very much linked to the second one in terms of this idea of lack of awareness, lack of actually what's possible on paper and control on it, and then therefore you make bad decisions. So you might have gone in and invested in a new person, as we just said, or some IT equipment, or you spent a load of money on marketing without any thought about, do I need that cash? Is the company in a position to actually make that kind of investment, or is that cash something I'm going to need in the future just because it's there? Should I have actually borrowed the money for this new van, for example, rather than paid it cash because I had the cash there? Would that have helped my cash flow based on everything else that's going on? Like all these kind of decisions, a lot of owners live day to day. They look at the bank statement and they go, yeah, cool. Or they look at certain figures and not the whole position. The biggest one to help this is really understanding how to read a balance sheet and having access to one that you know is accurate and up to date and accounts for future tax regularly. Now that's quite a lot of things to have actually, and that's where, shock horror, I'm going to say an accountant, a decent one anyway, will be able to put those things together for you. Again, you're going to have to pay for them or a service, right? It's another thing to have, but it's so critical to the growth of your business that I would always recommend trying to get hold of those figures. Or if you either can't afford it or you just don't value it, whatever the case may be, and you think you can give it a go yourself, then do the research and just get yourself on a cloud software if you're not already. So something like a Xero or QuickBooks would be the two I'd go to. keep your bookkeeping on regularly and up to date regularly, and then you'll be able to see at least a bit of a feel for the overall position. Watch our video on how to understand a balance sheet, and you'll get a real feel for kind of the health of the business, and that's going to help you make better decisions, which again I think is the overriding factor there, is people just make bad decisions with the money they have, and they're not very forward thinking, and then it all just tumbles down. Suddenly they can't pay themselves, they can't pay the suppliers, and that's the end of it. So there you go, there's some thoughts on what you can do to kind of help avoid these key 3 mistakes. Please do share it with anybody you think needs to know this information. Good luck, and I'll see you in the next one.